How to survive the recession. Secrets to win from inflation. So, what are some secrets to surviving the recession and winning from inflation? Well, one secret is to invest in assets that will go up in value during inflationary periods. Another secret is to have a diverse portfolio that will include investments that will do well in both inflationary and deflationary periods. Finally, it's important to stay disciplined and not panic during periods of economic uncertainty. So there you have it, some secrets to surviving the recession and winning from inflation. Do you have any other tips? Make sure you share them with us in the comments below. You can see the efforts of the recent inflation increase in the country if the flight you want to book for your forthcoming trip is more expensive than last year, or if your grocery bill has gone up even though you're buying the same amount of food as before. Consumers are feeling the pinch of steadily increasing costs, but the uncertainty about how long this trend will continue and how best to respond monetarily is particularly unpleasant. In the face of rising costs, the average consumer may have to rein in their penchant for extravagant purchases. If you are an investor, though, you are probably more concerned about the value of your money declining in the market. Select consulted with a panel of experts to compile their top recommendations for warding off inflation. And right now, you should put your money into one of these areas. Number 1, stocks. Despite their potential benefits as a long-term inflation hedge, stocks can suffer in the short run if inflation increases. Think of market tracking index funds that have done well in the long run but have declined in recent months. It's less complicated than ever to become an investor, even if you've never done it before. You'll need a brokerage or trading account to participate. To help new investors choose the best online broker, analyze more than a dozen firms that provide commission-free trades. And when it comes to free stock trading, the best brokers are those who provide the most investment choices, the most user-friendly technology, the best customer support, and the most helpful educational resources. If you're looking for a less hands-on approach to managing your portfolio, robo-advisors like Betterment and Wealthfront may be worth looking into. Number 2, property. For this reason, real estate's often a good investment during times of high inflation. As a result, your landlord can raise rent prices to keep their income up with inflation. Real estate investment trusts and mutual funds that invest in REITs are two alternative ways to engage in real estate beyond buying a home. However, the way real estate reacts to greater inflation may shift in the post-pandemic age. Because of COVID's long-term effects, fundamentals are somewhat in dispute. Demand for office and retail spaces is still uncertain as more businesses move towards remote or hybrid workforce structures. The cost of getting a mortgage has also been on the rise. Number 3, gold. Gold may not be a reliable short-term hedge against rising inflation, but it has historically held its own against price increases. Number 4, short-term bonds. Investing in short-term bonds is analogous to keeping money in a certificate of deposit or CD or savings account. Your funds are secure and easy to get to. When compared to long-term bonds, which will lose value if inflation leads to higher interest rates, short-term bonds are more resilient. As a result, Lassus recommends avoiding long-term investments in favor of short and medium-term bonds. She recommends investing in shorter-term bonds or bond funds as they'll be less vulnerable to a sudden increase in interest rates. Additionally, when bonds mature, investors can reinvest short-term bonds at greater interest rates. Get ready to make some tough calls. Recessions necessitate making difficult choices such as reducing the number of employees or moving to a smaller dwelling. Don't lose perspective during these difficult times. If you care about helping as many people as possible keep their jobs, you need to do what is necessary. There's a cycle that includes both economic downturns and upturns. Another economic downturn is inevitable. In light of this, responsible adults need to take measures to safeguard their financial security in the event of a recession. You may be familiar with the adage that the flu symptoms last for 3 days, 3 days to come, 3 days to stay, and 3 days to go. A recession, like an illness, often develops over several months. Plenty of precursors exist for it to be obvious. Once it starts, it usually lasts for a while. Recessions can last for a long time, and the economy's recovery is usually delayed. So that's it for today's video. We hope you enjoyed it and found it informative. If so, please give us a thumbs up.